Hello, what's good? You're welcome to the Elevation Lab. I am your host, Rix the Billionaire. I know. It's been a while. It's been a while. I begin to apologize for taking too long to record this session. I've been on the road. I've been up and about. But yeah, let's get it done. Let's take it away. So on our previous episodes, or rather on previous videos, I've been able to introduce what Forex is to you. I've been able to teach you how to calculate pips, teach you a bit of market structure. I even left some assignment for you, market structure from basics, more to an advanced level of how to understand structure much better. If you are new to the channel, just go back, watch all the videos from down below where it says if you're new to Forex, this is where you should begin from. So that you may be at par with what we are currently doing. On today's session, I would really want to teach more on price action. And price action, again, anytime we're speaking about price action, we want to speak about candlesticks. And price action, we always say market structure is king. And if market structure is king, then price action is queen. Why? Because price action gives birth to market structure. It's from the numerous candles getting printed over and over. We get what we call a chart pattern, and it's from the chart pattern you're able now to analyze the markets and predict what could potentially happen. So without much further ado, let me just go on. Let me just go ahead and share my screen. Today I want to talk about that price action, and of price action I'll be speaking on imbalances. I will also want to speak on weak lows, strong lows, weak highs, strong highs. So that's basically more like liquidity. Then I would also want to speak about momentum in candlesticks. So yes, that's what I'm going to cover in this session. Again, I'll do my level best to make sure the session is as short as possible, just to make sure you guys are able to stick through it. Again, please guys, help me grow this channel by sharing, liking, and also leaving some comments if you found this content valuable in the comment section down below. Let's load these charts up. Good. Let me get rid of these drawings. Just give me a minute. Just give me a minute. The machine is already acting up. Okay. Yes, like I said, guys, don't forget to leave comments on the comment section. Let me know if this content is valuable. Let me know if you guys are getting to learn from this. Let me know also what I can improve to make the sessions even better for you. Yeah, let's get this loading. Okay. right, let's get rid of this drawings. Okay, or let me use a chart that I don't use as much. It's like, you can get rid of this, then you can use this chart. So like I said, today we're going to be speaking on price action, and on price action we're going to begin by learning what imbalances are. Then we also get to learn a little bit on liquidity. Then we can also get to learn about candlesticks momentum. So I'll begin by imbalances. So I would want to start by defining what imbalances are. So anytime the market is moving, we always say market is moving in structure, and it's price action that creates structure. So there's nothing in this market, there's nothing like an imperfect price action. What do I mean by an imperfect price action? Let's say, for instance, we are on an uptrend and price was pushing in this way. So if normally price is supposed to like do a proper correction, or rather a proper pullback to like completely retest. Of course, not 100%. Retracement can happen all the way from 38. Is it 38.6%? Let me just be sure. From 38.2% all the way to 99.9% in the Fibonacci tool. Retracement can happen throughout those levels. But when price moves without like fully correcting, that's what we refer to as an imperfect price action. For instance, if we broke this point of resistance here, then price fails to come back to retest it, then gives us like a tiny pullback, then keeps on pushing. Now this is what we refer to as an imperfect price action. Why? Because price should have retraced all the way back there. Again, this is just like a diagram to help you understand what I'm trying to insinuate. So imbalances, I'll begin by defining an imbalance as an imperfect. This is an imperfect price action. And imbalances do occur, and they do occur at all time frames. Again, we always say the market nature is fractal. What do I mean? Whatever happens on higher time frame can be seen on lower time frame. If structure is formed on higher time frame, then we still have structure on lower time frames. If you have liquidity on higher time frames, then we still get to have liquidity on lower time frames. And that's what we call the fractal nature of the market here. So an imperfect price action is what I would refer to as an imbalance. And for this, I'm going to begin using the lower time frames. Sometimes you'll find that we have like an imbalance on higher time frames, and when you come back to a lower time frame, you are unable to spot the same. Again, once price leaves an imbalance, this simply means there's a potential of price coming back to that area. Of course, it doesn't have to be immediately. It can be sometime back in the future, or immediately. But again, always remember this. Don't get too caught up in finding out where imbalances are. Don't get too caught up in finding out imbalances, and also thinking to yourself that we have to like fill this imbalance right now for us to like take off. No, imbalances can always be filled sometime in future. So let me just get into it. Let me show you what imbalances are. So let's say, for instance, we saw this. Okay, for us, first of all, for us to have a perfect price action, this is how a perfect price action looks like. Again, we said this is now us reading candlesticks. So this is price action, literally. So I want us guys to take a closer look at this area right here. I want us to take a closer look at this area. I want to show you how a perfect price action looks like first. Then we get to look at the imperfect price action for us now to get like a clear picture. So if we look at this area, you can see right here, let me zoom it. You can see right here we have this bearish candle. Then we have this wick right here. Yeah, you can see where the wick is. Then you also have this wick and this other wick. That this wick, this is a candle wick that came all the way up to meet this previous wick. So what does this simply means? This simply means there is a perfect price action. We don't have any imbalances at this particular point. So you can see the same thing happening. Price pushing, then we have like retracement happening. Price pushing, then retracements happening. Then price pushing, you can see perfect price action. Everything perfect price action. Until now, we came to this zone here. Now this is where I want to show you what an imbalance looks like. So if you guys look closely here, we can see we had a bearish candle. Then this is where we had the last week. This is where we had our last week. Yeah. Again, it's very important to learn how to identify. It's very important to learn how to identify price action. Yeah. So right here we can see this is where we have the last week. Then from there we had this slight pushback. Of course, we never had this push to come meet the other right here. But again, we saw another massive push, even creating more imbalance. You can see from this area to this area, still have this week which hasn't pushed to meet the other week. So this simply means there was so much selling pressure that we never had like more orders coming in, or even presence of buyers coming in to try chipping. So this simply means all this right here, from this point to this point, that is an imperfect price action, and eventually it doesn't have to be immediately. Eventually we shall see, or rather we should see price come back to fill that imbalance. Imbalance is more like a vacuum, it's more like a bubble. Yeah, so eventually we should see price come back to fill that vacuum for us to maybe keep on pushing. And you can see what happened later. You can see price rallied again all the way back, then filled all that imbalance, tapped into this supply area, and price pushed to the downside. I hope you guys are starting to understand what imbalances are. Okay, let's create another scenario. You guys can see once price came up here, can see there was this strong or aggressive bearish push that pushed price right there. This is where we had our last week, and then again right here is where we had our last week. So this simply means again we should have seen this bias try to like push up to fill this for us to have a perfect price action. But since that never happened, now again we get to have a scenario where we have an imbalance right here. And this again, this is what we refer to as imbalance. And imbalances always end up getting filled, but again, it doesn't have to be immediately. It can be some time in the future. So once now we are able to identify areas of imbalances, then it gets easier for us. It gets easier for us now to be able to say, this is where potentially I'm looking to see price maybe rally to. This is where anytime, let's say you want to take like trades, now you can say I'm targeting this area. Why? Because you can still see there's the presence of an imbalance. Yeah. So of course, in future, I would really want to see this rally all the way up, maybe to fill this imbalance and probably tap into this supply area. Again, I'll do a nice video on how to like understand demand and supply. Again, I said I won't do an in-depth of demand and supply, just like a basics on supply and demand, because I'd want you to dig further for yourself. Let's see another scenario. Another scenario is right here where we had price push. We had this imbalance, which was this right here. We had this push, a strong bearish engulfing, leaving us an imbalance in between. We saw price come back, fill the imbalance, then break this area of resistance, then pushed up. Let's see if we can. You can see some buy scenario where price created an imbalance. Of course, we have this. This could potentially be the cause of some financial news, because this is what we refer to as an institutional candle. It's only institutions that can move prices this crazily. What do I mean? We have scenarios where just look at the normal candlestick, how a normal candlestick looks like. Then you can see this candlestick, it's so huge. So this simply means we either had high impact news coming out that pushed price aggressively to the upside. And yeah, this is definitely an institutional presence. This shows us the presence of institutional activity, because they have the power to push price to that dimension. So again, if you look closely, you can see we have a very, very huge imbalance from here. Price massively pushed to the upside, creating a very, very huge imbalance right here. So I don't know if price came back to fill it, but again, we should be expecting this to be filled sometime back into the future. That's how again, I said don't get so stuck in waiting, or rather waiting for imbalances to be filled at that particular time. No, the market could potentially push. Look at this scenario here. Look at this scenario where we had price. If you look closely, you can see we had this zone here. Then we also had this other zone. You can see this was the last candle, and then this right here was the last candle. Then clearly you can see price was pushing to the downside. Then when they reached this place, now it was time to fill this gap. An imbalance is more like a vacuum gaps are, and I bet creating an imbalance, then this supply area then kept on pushing to the downside. Again, the same thing here with this push. This was an imbalance. Why? Because this was where we had the last. That was where we had the last week, and right here it's where we had the other last week. Right here. So this simply means we had an imbalance here. We saw price come back, then push up. Again, when we speak about liquidity, we are going to touch on this in a few. Then we saw price push, fill the imbalance, and even push lower to take out all this liquidity. We are going there in a few. So by now, I hope you guys are now getting to understand what imbalances are. Imbalances are simply imperfect price action. And what imbalances do, they really help us to identify either potential target zones. Look at this. We had this push, price left a lot of imbalance. You can see this was a potential supply area. Again, I'll teach on supply and demand. This was a potential supply area. Why? Because we had an imbalance, price pushed to create a lower low, then eventually price came back to that area, tapped into it, and pushed all the way down. Again, you can see the same thing when we speak about imbalance. You can see we had this massive bullish engulfing. Price left us with a scenario where we had an imbalance. We saw price come back, at least retracing this massive candle. Then price kept on pushing to the upside. So basically, that's what an imbalance is. Imbalances are simply defined as imperfect price action. again, it's the same thing all over. You can see price pushed so aggressively, leaving us with a very huge imbalance from this point to this point. I bet you had looked at this. So again, this could potentially, of course, price pushed up. So this could potentially be potential buy area in the future, or rather potential demand zone into the future. Again, I shall do like an entire video just speaking on basics of supply and demand. So that was it on imbalances. The next thing I would really want to speak about is liquidity. Anytime we're speaking about liquidity, this is something else which what can I say? Okay, when you speak of liquidity, we always say liquidity fuels the market. And I would really want to define liquidity as stop losses. I would really want to define liquidity as stop losses. What do I mean? For market movers, and market movers are the big players. For the big players to place their positions, they need to, like, if they are selling, they always sell at the highest prices. And if they're buying, they will always buy at the cheapest prices. So what do the market movers do? The market movers will always use the most common patterns, the most common patterns. For instance, you have like inverted head and shoulders, what else? You have double tops, double bottoms. These are the most common patterns. Yeah. So the market movers will always use like even support and resistance and all that. These are some of the mostly used patterns, or patterns. Let me call them patterns. These are mostly used to create liquidity. And liquidity basically is, I will want to define liquidity as stop losses. So for them to move the market, they need to get all those stop losses. They need to get somebody else. I think if they are to buy, they need to get somebody who's selling fast. I don't know. They'll need to liquidate your orders for them to place their orders. So if you find yourself unable to spot the liquidity, then in most case scenario you end up becoming the liquidity. So I'm going to like do tiny markup again. This that I'm teaching today is price action. Price action, we said price action is queen. If market structure is king, then price action is queen. So I'm going to draw some of the most common scenario. For instance, let's say we were pushing up, then okay, let's say sometimes we would see something of this sort. I don't think if I'm doing it correct. Potentially you could see something like this. Okay. I don't know if I'm really doing the diagram correctly. But yeah, this is what I want to bring home. This is what I want to bring home. We have such scenario where we would see the market maybe behave in this manner, where price, let's say for instance, we can potentially see, let me draw this line to act as a point of resistance, where sometimes you get to see like potentially price keeps on rejecting a certain level. Let's say price comes to a certain level, then rejection, then maybe a push, then price again comes to a certain level, then rejection, then maybe a push, then price comes to a certain level, then rejection, then maybe a push. Or even let's say price, let's say we had this scenario on gold yesterday. Let me just show you on gold. Let me use this to draw the actual picture. It's easier. Okay, we have this. I'll just draw this picture for you. Maybe this will help you understand. even much better. You can see we had a push, then okay, I'll just like mark this level. I'll just mark this level here. I'll just mark this level. This is something I'm hoping this will help you guys understand liquidity much better. Let me just get rid of this. You don't need it. So right here, if you guys are keen enough, yeah, if you guys are keen enough, then you're able to see we have a scenario where our price left an imbalance. This was an imbalance right here. Again, we said the market is fractal in nature. Whatever happens on higher time frame could potentially happen on lower time frames. So we have this scenario where price pushed, then created a pause. Now, when I teach about demand and supply, this is what we call a drop-based drop type of supply. So we had this potential supply area. Again, you can see there was a push, an aggressive push that left us with an imbalance here. Then price created a lower low, then some consolidation, then price dipped. Then we can see price again kept on coming to this zone. I would want to I used this horizontal line just to show you guys the liquidity. So you can see price would come back to this level, then rejection, price dropping further, then price again coming back to that level, then dropping further. So I defined liquidity as stop losses. So this simply means a lot of people who took their sell positions from this area, a lot of people who took their short positions from this area, they have their stop losses above this zone here. Why? Because now this zone here was potentially a resistance area. Why? Because you could see price coming to that level, then rejecting, then price coming to that level, then we have in rejection. So potentially most of the people who took their sales from this zone, their stop losses are right here. This is where they had their stop losses. Again, remember, we said for the market movers to move their money, or rather for them to place in their orders, they need first to they either sell at the highest prices or buy at the cheapest prices. So you can see clearly there was this area of resistance where price would come, resist, price would come. You can see the same thing happened even when price came here. They tried to get in more people to sell, and after people sold, this is where their stop losses were. So we defined liquidity as stop losses. You can see what happened. Price pushed aggressively, took out those stop losses, then they placed their orders and drove the market much below. Let's look at another scenario. So basically, a liquidity is created by areas of strong rejections, like areas where you see price coming back. Okay, let's take another scenario here. Let me just go back, get rid of this. Okay. Let's look at this zone here. I want to show you guys. We have this area here. Potentially, we can see we had this imbalance here. Price rallied, almost filled this, but not completely. Then we had a scenario where price came, price started rejecting this level, then again price back to this, then rejection, then price back to this level, then rejection. So for this, what was really happening, price was creating liquidity. What do I mean? These people, or rather the big market players, were trying to get in more sellers to the market. Why? By creating a potential area of resistance. And you guys can clearly see this was a nice level. Even if you could have looked to the left, you could still say, oh yes, this is an area where structure was broken, so this is a nice resistance area. So coming in to sell, and where does your stop loss go? directly above this level, so get whooped out, then yeah, price goes all the way to the supply area, then boom, we are all the way back down. I would really want to like keep on going, but I'm limited on the time. I only have 7 more minutes left before this session comes to an end. So let's see if we can identify more cases of liquidity. The most common types of liquidity, we have trend line liquidity. What do I mean by trend line liquidity? Sometimes you'd realize price will move in a trend line. For instance, you have like this straight line here. So can see price coming back to this trend line, rejecting, coming back to the trend line again, rejecting, coming back to the trend line, rejecting, coming back to the trend line and rejecting. This simply means for the people who trade using trend lines, of course, trend lines always work. I did not say they don't, but again, this is just another way institutions, or rather the big market movers, use to create liquidity. So in future, again, liquidity does not have to be, they don't really need to liquidate at that particular time, but sometime in future, they could always come back to take all that. So this simply means whoever takes their buy entry from this area, this is where they have their stop losses, below this line of support. Again, the same thing, whoever takes the buy positions here, they have their stop losses right below here. And you can see we have more like what we could call maybe patterns. Yeah, for instance, you have this, which looks like should I say it looks like it looks more like an inverted head and shoulder, one ugly pattern. It's not easy to spot it. Yeah, so these are some of the things that are mostly used to create liquidity. Trend lines, for instance, you can see this is exactly what's happening right now. You can see when price was pushing to the downside, price was respecting this trend line, and what's really happening right now, price is coming back for the liquidity created by this trend line. So again, if they're pushing up, they will always be creating liquidity to come to the downside. If they're pushing down, then they're creating liquidity, of course, to drive the market up. Why? Because they have to go for those stop losses. They have to go for those packet of orders. I would want to refer to liquidity as packet of orders. What else? We have such scenarios where we have this. This is more like equal tops. Of course, there's landing in some way, but eventually you should see price come all the way up. Take this out. Yeah, I bet I should do like more on the same, more on liquidity, because I was to speak on candlestick momentum. I don't know, I only have 4 more minutes. Okay, let's see what you can do. I also wanted to speak on weak lows, weak highs, strong lows, strong highs. Let's see if we can cover that in this 4 minutes. So I want us to think of an auction. Yeah, let's say we are doing an auction where we auctioning something. For us to be able to sell that thing, it simply means we have to have the highest bidder. And if we don't have the highest bidder, we simply can never get to sell that thing. So the same will always happen to price. Price will have scenarios like this where we have crazy push. We have this massive wick here. So this is a strong rejection. This shows strong rejection of lower prices. So if this shows strong rejection of lower prices, this means this is a strong low. Why? Because there's a strong rejection. But you also have other scenario like this, where we have the bullish wick and the bearish wick, they are all on the same level. And this is what we call an incomplete auction. An incomplete auction is also a form of liquidity. This right here, this is what I'm speaking of. You can see we never got to have the highest bidder. So this simply means, again, in future, price could potentially drive lower than this to complete this auction. For us to have something of this sort, a strong rejection. And the same happens to the highs. You can see we have this strong push, of course, giving us like a nice strong rejection. And then you can see this, we have this scenario here, a very perfect scenario. You can see price just pushed right now to complete this auction. Again, it doesn't have to be immediately, but sometime in future. We had an incomplete auction here where we had both the buyers and sellers all coming to like the same level. So this simply means we had to see price come. This a presence of weak highs and weak lows signifies a potential for market coming to that level in future, and that is simply, again, liquidity, a form of liquidity. And you can see clearly price has pushed up, taken out these weak highs, and now you can say probably now are experiencing a complete price action, or rather a complete auction. I'll begin the next session of supply and demand by touching on candlestick momentum, then maybe a little bit on strong lows, strong highs, weak lows, and weak highs, because again, that is a form of liquidity. So again, guys, that's it for today's session. I hope you guys got value from this session. If you found value, don't forget to give me a thumbs up. Don't forget to share this with your friends. Let's grow this community together. Thank you so much. See you guys on the other side. Bye.